The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, good morning, folks. We got another day in Rock and Roll City. Thanks to Chairman Mario Draghi, formerly of Goldman Sachs. My friend actually hired him many, many years ago. Anyway, he decided not to do anything with ECB rates, and we saw the euro drop 160 pips in a matter of 10 minutes, and the stock market move 150 points higher. I don't understand why the Europe doing anything makes our stock market go up 150 points higher, but that's neither here nor there. The first chart that we're going to take a look at today is a request from one of our frequent listeners, and the company is PayC. I'm not sure what it is, but I put it up, and we'll take a look at it. As you can see, we had a pretty good run in this stock, for quite some time now. And we have a three drive to a top pattern forming in here. We came down quite a bit to the 61% retracement on the 24th, and then we rallied up onto the 786 retracement yesterday or 2 days ago, and we're in that zone right now. But to really get an idea of what this stock is doing, on a longer term basis, if we look at it over the last couple of years, you're going to see that we've completed a perfect ABCD move up in that area right around 41. The high was 41.59. We had a three drive to a top pattern there at that point. So and then we had the break that would dropped a little more than 20%, and then we rallied back again with the extreme volatility that we're having here. So that's what we're looking at with PayC here. I would prefer to be out of this stock if someone were asked to give me a recommendation, and I'd be waiting to try it, maybe to try to buy it down around the 22 level if we get a correction in stock sometime, during 2018 or 2019 when the Federal Reserve finally raises, interest rates, if in fact they do. Okay, now let's take a look at what the real market is doing here. We want to go and look at the New York Stock Exchange Index, because that's the one that I have to go by. I know I probably ought to turn in my chart pencil and my microphone, because it's it's just a what do you call it, a broken record, doing this. But anyway, this is what we want to be looking at here. As you can see, well, you can't see it yet, but you will soon. Bear with me here. You'll be able to see it soon here. And I'm going to do all of them. I'm going to do the NASDAQ, I'm going to do the S&P, and I'm going to do the New York Stock Exchange Index first. We're due to be about 100 and some points higher in the Dow, 20 points higher, I guess. No, 10 was 20 points higher in the S&P. Now it's about 10 points higher, and I think 15 or 20 or so in the NASDAQ. But yesterday we talked about this. This was a very, very clear pattern. We had the ABCD structure up into the super full moon on the 28th. The market came down yesterday, and it stopped exactly at the 61% retracement of the low on the 26th, or excuse me, the 786 on the low of the 26th, and it stopped at the 61% retracement on the low of the 24th. We told you were still in an uptrend because you had higher bottoms. Now today, there's two levels to look at. And believe me, this is the real market, folks. So this is real money. It's not the futures and the funny stuff that goes on, pre-market and stuff like that. This is real cash money. So we'd be looking for a high sometime this morning between 1092 10,092 and 10,164. If we take out the highs, and we certainly could, of the high that we made last on the 28th. That tells us that this bearish scenario that I've been looking at is completely wrong, and I'm going to have more egg on my face than I've had in a long time. Fortunately, all of the positions that I have on for Fibonacci 24/7 service have really good profits. We've given a lot back. I mean, I'm almost embarrassed when I have to send those charts out. I want to throw up, but I was looking for something big, but I didn't think we would get this much of a retracement back. But I even though I was beating myself up, I said, well, at least I got really nice profits and everything, even if I get stopped out. So that's the way I have to play it. It makes me feel like CRAP, which is an acronym for another thing that we all know about. But that's neither here nor there. This is a really key time. Folks, you might not remember this, but on September 3rd, 1929, at the price of 383, the Dow Jones topped, and it went down to make a low in July of 1932 on July the 5th. It made a bottom at 42. It gave back 95% of its value. 16 of the Dow stocks went bankrupt. At that time in 1929 in September, there were 2,600 automobile companies in the United States. Remember some of the greatest inventions of our era: electricity, telephone, toilets, and refrigerators. All that stuff was new, much like we have with the internet now, with Facebook and all the things that are going on there. So anyway, that's the New York Stock Exchange Index one. So the next one we want to watch is the hold on a second here, and we'll put up is the we'll do the next one we'll do is the NASDAQ, I believe. Hold on once. Oh, let's do the E-mini S&P, because everybody has an interest in that, and we were looking at that, if you remember. Wow, it made the 786 retracement. Boy, that's hard to believe, isn't it? Okay, here's the I thought we were going to get up to the 955 yesterday, and in fact we did get there. And then with Mr. Draghi out there this morning, it took the market almost up to the exact 786 retracement. And now we've given back all of the Draghi speech. He basically has talked, and for 10 minutes the market went basically vertical. It hit within 2 points of the exact 786 up there, but we'll see. See, the real key to me, folks, is what's going to happen with this New York Stock Exchange Index today. It's going to be higher. I want to see how high it goes, but if it closes in the lower part of the range, and tomorrow is going to be a really key day, because of the fact that we've got this long weekend coming up. China and Hong Kong are closed for 2 days, so there's nothing coming out of Asia, and so that means there's going to be a whole lot of volatility coming in on Monday, and that's our holiday. But the trouble is, it's not a holiday in China, it's not a holiday in Europe, and so our markets will be trading on the Globex, but the rest of the markets won't be over, and that's going to make Tuesday a bonsai day, either up or down. And if we close badly on Friday, it should be down. If it closes up on Friday, most probably the Tuesday will be an up day. That's what I'm looking at as far as a technical picture, from what we're watching at that point. Okay, the next one we want to look at is the Dow Jones Industrial Average, which will use the hold on just a second. What do they call that thing? Oh, the Dow Jones E-mini, and we'll bring that one up, and we'll see that it also made a 786 retracement of that move. Just give me 1 second here, and we'll get it put in. It went right to the number, so that's a good sign. Maybe this Fibonacci stuff, does work, even though the fact that they're working it. If we were to close today, this would be on a hourly candle. That would be a shooting star candle, which is relatively bearish, but it's still relatively early in the game. So we covered this. Now we need to cover the NASDAQ. That's the contract on steroids. And so if you give me 1 second, we'll put it up, and then we'll go on to a few other things like gold, and because gold is getting close to being almost worthless, they're telling me, over in Europe. So we'll see if that's going to be the case. Okay, now here we had a situation where the NASDAQ actually went above the 786 for just a little bit. Give me a second here. There we go. And then we'll bring it up here and take a look at it. and you'll see that the NASDAQ did go above the 786 by about 10 points, and now it's down. We're trading quite a bit below where we were when Mr. Draghi was talking. Yesterday, folks, I had a really interesting chat with John Hill. He was one of my original mentors in 1970. I met John in 1970 at the Stanford. What was the name of that place in San Francisco? Anyway, it was the Jim's Hurst company. Cyclotech was coming out with cycles, and there was all kinds of people there that some of them are pretty famous in the business these days. But I did meet John Hill there. We became friends. John came to California to visit me in 1973 to meet the family, and he brought his daughter Holly. And it was really funny because they came to the airport, and John was getting the luggage, and I was a little late getting there, and I recognized Holly's picture. She's a 16-year-old girl, just as cute as a button, and she was standing next to a pillar. And so I walked up to her and I said, "Hey, would you like to buy some drugs?" And she just turned white as a sheet and she said, "Daddy." And he turned around and he started laughing, and she looked at me and she says, "You must be Larry." And I said, "Yep, it's me." And she says, "I'm never going to forgive you for this." And she never did. One other fun thing with the family is 1980, when John and I were working on the book, The Opening Price Principle, which was basically a reprint of the work from, oh dear, now I've lost their names. They'll come up to me in a minute. Jim Sibbett and Earl Hannity were the guys that wrote the original Opening Price book back in the early 1960s, and John and I brought it out again in 1980. We started to research it, but the Opening Price Principle doesn't have the same value that it used to because the markets are open 24 hours, but it does have value because if you're trading in something and you're below the opening price and you're long, you've got a problem. And if you're short and you're above the opening price, you've got a problem. So that's pretty much it. Yes, the name of the hotel was the Stanford Court. Thank you very much, Doc. I appreciate you reminding me of that. And but those are just fun memories. Anyway, John is 89 now. He's still trading every day. And I asked him, I said, "What are you doing about these crazy markets?" He said, "I'm sure you're just like me." He said, "I get up to take a little break in the middle of the night." And he said, "The next thing you know, it's morning." And he said, "The swings," he said, "we haven't seen these since 2008, and you have to make hay while the sun is shining." And I said, "Yeah, that's true." I said, "Fortunately, we like what we're doing, so it makes it a tad easier." And he told me, he said, "Remember, the definition of hell is when you have to go to a job between 9 to 5 every day, Monday through Friday, with someone you don't like, looking over your shoulder, a job that you don't like, and that is your definition of hell." I mean, we have some really rough times here, but this is nothing like if you had to do something 5 days a week that you really wouldn't like to do. And fortunately for us, that's not the case. So we'll just keep in mind here, how these markets are jumping around, and believe me, they are definitely jumping around. There's no ifs, ands, or buts about that. Okay, we'll take a little break here. We'll get back and we'll talk about the gold.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, we're going to go back to the history book there. We posted a chart here of gold on a 30-minute chart going back over the last couple of weeks. And as you can see, we didn't hold at the 618. We didn't hold at the 786. We do have a cycle day being forecast today. That's nothing more than 145 bars of a 30-minute cycle, which makes it 72 bars of a hourly chart. And so that's what we're looking at here is potential bottom coming in on the gold on this particular cycle. The move down between point C and B was just a little under 1.27 down at that 122 level. The 786, of course, came in at 123, and our low has been 120 and change. So it looks to me like we could be getting close to a buy here in gold. Silver is acting much, much better. You know, it could hardly go down at all when gold broke badly because of the things that were said about the Hello, Federal. Let's talk about what Draghi was talking about the ECB increasing the share purchase to help float the euro, and the euro is floating. It's floating down. We're getting, we're not too far away. We're only 10 handles away or 11 handles away from parity, and that's what our original long-term weekly cycle, happens to say that we're looking at when we're watching these things. Now, the other one that I wanted to mention here is the platinum market. The platinum market has not broken down nearly as much. I mean, it's still much higher highs. We've also had an 18-cent rally in copper. I believe we rallied from 220 to 238, which is a huge rally in copper, almost $5,000, $4,000 to be exact. And so there are some signs that some of these metals are holding. Why gold is down, I'm not sure, because I actually like gold, and I am buying a little bit today, but we'll see if it's going to hold. But any move below 119 would certainly tell us that we're probably heading down to the 1095 level, which could certainly make that happen very easily. If we look at the daily chart, on the gold, you'll see that one of the things that we've been looking at on a longer term basis is this pullback, and that pullback does come in at around 1108, and that's a still a valid number that we could hit quite easily. All I'm looking at this morning is that shorter term cycle that happens to be there. Now, the problem with these cycles that you post, and these are the ones that Jim Hurst worked on, these are called nominal cycles. In other words, each cycle is the same length, and the problem is they only work for usually 2, sometimes 3 repetitions, and then they expand and contract. And that's what the market is always doing, because we're never stagnant here. We're either expanding or contracting, and that's the same thing with cycles, and that's why they expand in a spiral basis based on the Fibonacci sequence, based on what I think. That's just my opinion, but we'll just have to wait and see. But anyway, that's a potential here in the gold here as for a little bottom coming in, and believe me, how much of a bottom it's going to be certainly remains to be seen. The next one we want to take a look at here is the euro, and it really had a big drop here today. And I'll just bring this up so you can see it here on a 15-minute chart, what was happening. We had been in a really strong downtrend all along. I mean, every time, it popped up 40 pips or so, you wanted to look to be a seller. And the last little retracement we had here was nothing more than a 382 retracement, of the move down. And then boom, it stopped exactly, folks. Look at this. This euro stopped, well, it's still early, but it stopped exactly at the 1.27 expansion of the move from the 28th of August up to September 1st. So that tells us there's probably some type of a small bottom coming in. And the last time one of those small bottoms occurred, it rallied over 100 pips. Well, if you're day trading, this is an ideal, trading vehicle for trading, because it's so active and there's so many people that trade the darn thing. It's thousands of times bigger than the stock market. There's the problem that we have, folks. We're focusing here on the stock market, and the problem is not with the stock market. The problem is with the bond market. The bond market is where the real problem is coming. This quantitative easing is going to come, and it's going to be a Halloween day one of these days, and there's not going to be any treats. And it's becoming more and more clear as you look at these charts that there's something not right out there. And what my worst fear is we come in some morning and they change the rules. That I don't want to see. Okay, we got to take a little break to pay some bills for Chairman O'Brien. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And I started to, we worked on the euro a little bit before the break, and I'd like to continue the Forex through a couple of major cross rates that I think are very, very important. In fact, where we are right now, we've had a really big move in the British pound from that 158 level where we had the ABCD Gartley structure just a couple of weeks ago at 158. That sets up another Gartley on the downside, which is about another 150 pips from where we are right now. So we want to be watching that next week because that could offer a very good low-risk buying opportunity, because at that point, when we get to that point in the pound, you're going to have three ratios coming together. You're going to have a 1.27 ratio from the BC swing. You're going to have a 61% retracement from the X to A point, and then you'll also have a 1.618 retracement from the C to D point. So you have three major ratios, coming together at the same time, which could be, pretty important. So we'll keep an eye on that to see what's happening. One thing we're going to check here in a little bit is how the New York Stock Exchange Index, how much it's going to open up. But the next one I wanted to talk to you about is the Japanese yen, the dollar yen cross rate. As you can see, we had that 61% retracement yesterday into the rally. If you notice that on September the 2nd, when it was making a 61% retracement at 119, that's where the market turned, folks. We were up on the stock market. It backed off from being up 250 to being up only about, I think about 110 or something like that. And when that hit the 61% retracement, that ran us all the way up to the 1.618, the ABCD 61% retracement. Now, this market should have done the opposite of what it did when Draghi spoke, because that's basically a risk-off situation, and one would think that this market would have, went the other way. At least that's my opinion of it. But we did stop again right near that 61% retracement, so that could be the factor that's going to give the folks a pretty good run for their money here on some of these things. So this is what we're keeping an eye on. Both of these currencies, the Japanese yen, and also if we take a look at the yen on the daily basis, you'll notice that we've had some really incredible swings. And we've mentioned this before, that the high that we made just the other day was an exact 61% retracement of the whole move down during the big crash time from August the 17th down into the 24th. And now we're coming into phase 2, which should start Monday in Europe and also Asia, but we're closed here with the exception of Globex. Globex will be open. They open Sunday night, and they'll be trading all through Monday till about noon. That'll be 3 o'clock New York time, so it should be pretty active, and we'll have a pretty good idea what these markets are going to do on Tuesday. But like I mentioned, if we are correct, the market will not close really sharply higher. If we get above that 786 that we made this morning, which is 1968 in the S&P, then that would probably tell us that I'm totally wrong, and we have to go back to our crossing of the 400-day and the 200-day moving average. That's what we'll have to do. But until that time, let's just give it a little bit of time to see what's really going to happen with the stock market today, and we'll take a quick look here at what we're doing with the if we've opened yet. We've not opened yet in the New York Stock Exchange Index on my machine, and I don't know why, because we should be getting prices. My guess is we should open at around 10,092 would be my guess, but the breadth of the market has been so bad for months. It just doesn't appear that there's a lot of people wanting to buy stocks here. There are more people that seem like they want to get out of stocks than they want to buy stocks. But this is still early in the game, and we've not had our first tick yet. I haven't seen it. Let's just post it up here so everybody can see. But we're someone's got a Basil, thank you. He's got you got a better price than I. There we go. I got it. At the low, it opened at 1044. It's now at 1066. The 1092 is the 61% retracement on the move, and we probably will be there, in a matter of minutes. But we'll just wait and see what happens, with it from that point. So anyway, this is the key today. Is it just like yesterday? We had to wait till the close. We had a positive bias. We still have a positive bias this morning, but it's going to be the first few hours. If the overall stock market, the New York Stock Exchange Index, can hang in there, it'll be the leader, and it'll pull up the Nasdaq and the Dow. Not that they need any help, and the S&P. And then if we get above 11, I lose track of the numbers, 1970 in the S&P, then that would tell us that I am totally wrong, and there's not going to be a crash. That was a major bottom down there on the 24th that I just flat out missed. And believe me, I've been wondering about that because of the fact that if we take a quick look here just to show you, boy, this thing looks so bad on a this thing looks so bad on a daily chart on the New York Stock Exchange Index. I just don't understand how anybody could be bullish. But yeah, I might have missed the bottom from the reason that we hit the the exact 1.27 of the October low to the exact tick. I mean, that was not much of a mystery, but that is what happened, and that could be the thing that's different. I also, if you remember yesterday, I brought out that emerging market chart too, because that's another thing that tells us that maybe everything that's happened is just like what happened in 1987, where we have a situation where it just looks so bad. In fact, it's not nearly as bad, and that is always that's always the case. But I'll put this chart up again so you can look at it, because we have rallied more than 10% off the bottom in the emerging markets during this time, and that's the key here. Is maybe that's it, because we completed a big ABCD from 2011 to 2015, stopped exactly at the 61% retracement. It stopped exactly at the 1.618 retracement expansion, and it stopped exactly at the 1.27 expansion of all those swings. So you had three major things there, and that could be it. And maybe the breadth is what we're looking at is totally misleading this time, and that's always a possibility. So we must keep our mind flexible. We don't want to get too much off to the races if you're wrong on the analysis. If you looked at the daily chart, on this on the EEM, it still looks bearish, but just a second, I got a slight problem. There we go. Let me get it ready here. I'm just trying to show you the devil's advocate, folks, because when the devil is in the house, you got to be careful. So we're going to take a look here and bring it up, and you'll see that's what it looks like on the daily basis on the EMM. So we'll watch it. The key is going to be what's happening on Tuesday. Today too, because if we close really strongly today, all bets are off, and we're going to go probably a whole lot higher, and we're rallying again really strongly again. So the problem is we'll see what the next level is going to be here at this next point. Gold's up a couple dollars from the bottom. The Nasdaq is now rallied back to a 61% retracement of this early morning range. The Dow has taken it out, so we're still in the early morning euphoria part of the market. I still do not have an opening for the New York Stock Exchange Index, and that's not fair, because I pay a lot of money for this service, and it's not giving me an update. My guess is it's pretty strong. So we'll see what the bottom line is going to be with this, and we'll see what's going on from that level. Okay, there's one other market that probably should pay a little attention to, because it gets a lot of press, and that is the crude oil market. And I wanted to bring your attention to this, because we're getting really close to a fact is we're almost there right now. You want to keep an eye on this, because we are we're right there right now on a 61% retracement of the crude oil market. And all you've done is you've taken out yesterday's high by a little bit, and you're right at the 61% retracement. Now, that doesn't mean it can't go another $1 a barrel higher up to the 786 at 4,800, and it could be totally wrong. But the market did break 10%, and we broke down, and that was in one day, of course, and it went from 49 down to 43, and then now it's rallied back. So we'll see what this this high is going to do here, but this is what it's doing right now. With this wide bar that we've had the bar is well over $1.20, so you probably ought to wait at least half an hour before you try to do anything. It'd be better to sell this lower than to try to sell it at the number and then just put a stop above it. That's a choice that you would have to make, when you're watching these things unfold like we are. Okay, now we need to get to the bond market here and take a look at this. This is a market that really is sick, folks. I don't see anything to make this thing do anything but go down. We're in an area where we should be making some kind of a bottom. We've got a lot of ABCDs, down here, and we'll see if this is going to hold it. But frankly, we held it for a little bit yesterday, but the market just does not want to react. And this is where the problem lies, folks, is in our bond markets. The bond markets of the world is where the real problem is. The stock market is the canary, but the real problem is in the bond market. They've been issuing bonds for 32 years now, and they've gone to the extremes like we've never seen before in history. And this is not going to end well. It never has in history. But like you say, this could be be a long time coming, and then you'll have to to wait and see what's going to occur with this. So this is what we want to be watching in the bonds. I frankly think there's going to be an economic event, what they call a change in the continuity of thought, and that means that everybody's thinking one way, and all of a sudden they wake up and they think the other way, and that's also a problem that could be happening here. So we'll be seeing. Anyway, the gold is interesting. Has rallied $5 during the time we've been here on the air, which is a good thing if you're long a little bit of gold. Silver's acting extremely well compared to the gold, which it has been all along here. It hasn't been backed off hardly at all. And the same thing that we've had with the platinum, and it also is acting pretty good. So all of that is telling us that that's where we are in the silver market. As a matter of fact, all silver did this morning, I'll put this up so you can take a quick look at it. All silver did was come down and stop at a 61% retracement, exactly to the exact price of $14.55. We're now 20 cents higher than that, and so that was the one that you would want to be buying. And but anyway, it's held, and it showed that we've had we're much stronger with the gold and the silver. Let's try it again, Larry. We're much stronger in silver than we are in gold, which is rather unusual, but that's what's happening. And so we want to remind ourselves that that's what's going on. Oh, I had one other interesting thing happened last weekend that I wanted to mention. We have a good friend that owns a gun store up in Phoenix, and they told us that their business was for some reason way off, and he's one of the premier dealers up there. So the gun business in Arizona has really slowed down quite a bit. Evidently, all of us have got all of our guns, so nobody else needs any more. So whether that is any effect on anything or not, I don't know. But the fact that his business, which is usually very, very consistent, has slowed down a bit, but that's still neither here nor there of what we're watching. So anyway, okay, now we got another break coming up here pretty soon, and then we want to get back to review. Basil, would you be, if you're there, Basil, would you be kind enough to give me a quote on the New York Stock Exchange Index? There you go. Is it where? Somebody give me a. I don't see it. Yeah, I still don't have a quote on the New York Stock Exchange Index today, and I always get those quotes. I just don't understand. 1087. Okay, that's very, very close to our. Thank you, Chapman. Thank you, Basil. Anyway, it's 1092 is the 61% retracement of the move, so we want to watch that. The close will be the key today because, the early morning buying, the market's, for some reason, when the market's up 150 Dow points, everybody wants to buy it, so it's pretty much what's going on. Okay, 1094 was a high today. Well, 1092 was the fib number. We'll be right back, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and just keep in mind the close today is going to be the important thing to look at. I believe we've already exceeded the 61% retracement on the New York Stock Exchange Index at 10,092, and we could easily go above the 786. And like I mentioned, if we take out those highs that we made on the super full moon of the 28th, the whole bearish scenario that I'm looking at is probably wrong. But you've got to wait until Tuesday, because we've got the holiday coming up. China and Hong Kong are closed yesterday, today, and tomorrow. This 3-day holiday. It's Victory Day in China. They're having all kinds of parades and stuff. And if you'll, have set on your hands and wait and see what happens on Tuesday, you'll have a better idea of what's probably going to happen. But we have to think that there's a possibility that we've had a situation where none of these commodity prices mean anything, and that we made a major bottom down here, and quantitative easing is going to come in and work for another couple years. That's the only other alternative that it could be, and you don't want to fight it, as we already know. The technical picture on the breadth of the market is extremely bearish, but that can change also. Some people could start to buy stock, and when I start to buy stock, folks, you better start selling. That's all I can say. Anyway, this is what we're looking at here, coming into the weekend. The Globex will be open on Sunday. It opens Sunday night, 6 o'clock. New York time, and it will trade straight through till the Tuesday opening. So you'll get a pretty good idea of what's going on in the markets, at that time. The gold has rallied a nice $7 from the since we started on the show. If you happen to buy that, put your stop at break even, and or take a profit, whatever you like to do. But that's something that you want to keep in mind to see what's happened. But one other question: someone's mentioning that we are looking at new lows in wheat. Yes, we are. We were expecting that, and we'll cover that tomorrow. We'll try to have Rich Anderson as our guest. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.